All right. Morning, everyone. Here we go. All right. Having a look at the close in U.S. markets on Friday, another all-time closing high again for S&P 500. We've got the Nasdaq that's starting to actually creep back up toward the highs of well, the recent highs. Still not back to all-time highs. Haven't got all the way back to the level of where we were back in 2000, but S&P going back just every day seems to grind to new highs, and it does so on pretty light volatility and light volume, and kind of in a very sustainable way. And the Nasdaq is starting to creep back up toward those highs of the year as well. So I think very consistent, solid action, making it very difficult for us to really get in the middle and play between the spread and that kind of thing, because the volatility is just so low. But we're continuing to see this grind higher. We had non-farm payrolls, which is finally for the first time we've gained all the jobs back that we lost from the 2008-2009 recession in the States. And that was on the release of the non-farm payrolls number on Friday. We've got the VIX also, which hit 7-year lows in conjunction with that. And that's a really, really telling story there. We'll show a chart on that in just a second and how significant that is. And then we also had just a couple other things, as some of the retailers like Gap, which beat same-store sales and things like that, just kind of helping boost the grind higher on the S&P. Okay, when we look at the Asian markets, we're a little bit mixed. Everything was up really outside of the Kospi. But we've had data that's continued to drive the markets higher. We've had the U.S. data, which has really been hot over the last maybe 3-4 months, and now all of a sudden it seems like the Asian data is starting to turn a little bit better today. We had some upbeat Japanese and Chinese economic data out today, with Japan that had quarter one GDP, which was revised up to 6.7% from the original 5.9. Really just driving some of the large cap technology shares, industrial shares higher. We had Chinese exports for May that was also increased by 7%. That was quite a big bounce up from the prior month's number of only a 0.9% increase. And the expectation is less than expected, but I mean, we're still getting data which seems to, from a large extent, starting to turn to the upside a little bit in Asia as well. We had some of the Chinese property developers and things that were really plummeting, though, on the back of some of the land sales in cities. We've also seen that copper under real pressure. We'll show that chart in a little bit. So I think China is still continuing to be the laggard, but everything else seems to be just fine at the moment. Talking about that chart in the VIX, here's a chart kind of showing the real low points of the VIX. If you go back some of I think the chart that we showed about 2 weeks ago, really showing that kind of range of the VIX and the support level that we've seen on the lows of the VIX, which we've actually dropped below now. You can kind of see here, and you can see the lows of going all the way back to January 1990, and the subsequent 1 month, 3 month, 6 month, 9 month, and 12 month change in the VIX after that, after we've hit these kind of lows. And you can see here the red numbers are really actually that's a spike in the VIX. Obviously that's showing a rise in volatility. For the most part, we've really seen a consistent rise in volatility. There's only been I believe two periods after this where we've seen the 1 and 3 month volatility number continue to drop. So the likelihood that the VIX is going to start to rally from here and rally quite intensely is probably quite good. All right, we had MTN cut to neutral versus buy at UBS this morning in corporate action. We've also, in terms of market data, not a whole lot to look at. We had the current account balance out of Japan, which is slightly worse, as well as the trade balance. And then we have also had the GDP numbers quarter on quarter there, which was better than expected. So bit of a mixed bag there. Okay, let's have a look at the maps. We've got a hell of a lot to look at this morning. A lot of us going to have kind of the same theme. I've got the first chart up here already, and that is the copper price, which this is the New York copper price, New York settlement copper price. It actually doesn't have this morning's 1% sell-off in it. Right now we're trading down around 302, which is down around these sort of levels right here. So we're all the way down here below even where that wick went from from Friday's session, and as you can see there, we've dropped out of a really clear-cut bear flag, and I think that we can easily take out these lows. I mean, we totally collapsed as of a few sessions ago. We've got iron ore that's really under pressure. We've got coal that's under pressure. This is becoming an old story, but I think as the sell-off, if it continues to intensify, it may start to put a little bit of pressure, more pressure on some of these shares. You see a lot of these guys who continue to say, things aren't that bad in China. You get a lot of guys that are saying, now's the time to buy some of these mining stocks. And I think the most important thing that we can do is continue to follow the maps and take the guidance that they're giving us and try to just go with it rather than to actually call what's going on. The market's going to be smarter than any of the other talking heads that you're going to see on TV. So. All right, let's look at Tiger Brands. Tiger Brands on a one-year chart here, really breaking out of a bit of maybe a narrowing wedge here that we've been building in for the last month, and like I said, breaking out to the upside of that. Looking like we can really take out recent highs and perhaps even all-time highs. This has kind of been a common theme on our equity market. If you look here, I mean, obviously as we talked about the other day, we took this level out and we've really just made this consolidation on the back of it. So on top of that breakout, which is really important, it really adds further bullishness to this setup. Like we said the other day, that this is, that they haven't had great earnings. This company is hardly growing. This is it, but at the end of the day, there's too much money coming into the market right now for a lot of these stocks to come off, and it kind of becomes a pick of a bad bunch, and things just continue to drive higher. One of the things that I think we have to be really aware of is the amount of shorts that are out, not just in our market, but in the global equity markets, the global bond markets. I mean, this across the board. I mean, retail shorts are as high as they've been in a long time. So it's going to be really hard, if not impossible, for the market to come down under those scenarios without some sort of major catalyst. All right. Next thing here is the banks. I mean, the banks just went totally nuts in the last 2 or 3 sessions, basically breaking out from all levels. You can see there, this is FirstRand, really taking out same sort of thing, a little bit of a narrowing wedge formation here. But also, I do believe that Friday was a closing high. You can see there only narrowly, but definitely a little bit of a closing high, about 10 cents above the previous closing high. So, we've probably got another Rand plus of upside and FirstRand in the near term. If we look at Standard Bank just totally ripped through the what looked like could be a potential double top of sorts going back from before. We broke out to the upside of that. I mean, this pattern's a little bit, it's a little bit undefined. It's a little bit messy. But either way, we're breaking out to the upside here. And from this chart, I mean, we're really looking like we've got at least $5 to the upside here to take us probably up closer to 150 in Standard Bank. If you look at Barclays Group Africa, same sort of thing, very messy, very choppy. But if you run this back, going all the way back into November, where the previous highs were, that's where the highs were before Friday. We had two touches of that level in May, and then we really seemed like we were failing only 3 sessions ago. We're trading a 152 offer. Next thing you know, we're closing above 160. So that's really impressive. And obviously, like we said, we're breaking out to the upside here in ABSA, and this is we're looking at a 1-year chart. It's showing a massively higher target. I mean, we can go back a little bit further, but either way, I mean, we're looking at a massively higher target. Any way you look at it, we're going to probably move the height of this consolidation to the upside, and that's talking pretty big numbers, north of 10 Rand. All right, let's look at Investec, sticking on the bank theme here, also ripping up to new all-time highs, and this finally on that breakout above 93 is starting to look like we can. It almost looks a bit like a bit of a flat inverse head and shoulders pattern, but it's definitely giving us a target here right about to 100 Rand. It's actually probably showing 99 Rand. We'll call it 100 for good measure, and I think that we're going to move up there, rather quickly in the next few sessions. It's a very symmetrical kind of breakout here from 88 to 93. So obviously should project us up $5, take us up to 98 Rand in Investec. And all right, let's look at Let's look at Imperial. Imperial, another one of these industrials that really hadn't been able to get anything going until the kind of grind higher that we've seen over the last couple months, and it had been one of the laggards, and so it's really played catch up. Definitely making some sort of what looks to be a bull flag here. If we get any sort of upside today on this thing, it would be breaking out to the on the top side of the bull flag, and would show us a significantly higher target, probably up at least to 210. And then the last one we're going to show is Barclays and London. And really, Barclays is making a bit of a head and shoulder pattern there in London. We haven't gotten we've bounced a little bit off of the level on Friday, but the level I think is very clearly defined. Very clearly defined. If we drop below £2.40, then we drop out the bottom of this, and the target I think is all the way down at about 220, or sorry, 215. So £2.15 on the drop of this level in Barclays. So watch that one closely if you're playing the London session. And that's it for today, guys. Thanks a lot.